HSBC is Europe's biggest bank and employs 48,000 people in the UK. Today, that number is being cut by 8,000. It means 1 in 6 staff who work for HSBC here will lose their job over the next 2 years. Why? Well, it's because making money from banking is much tougher now.
The good times are over. Since the 2008 crisis, the regulators have tried to ensure that banks don't make profits just out of trading. So a lot of the trading for own profits has been shut down by the rules.
The bank wants to save £3.2 billion. So as well as cutting back on staff, they'll be closing branches too. Now, the chief executive of HSBC, Stuart Gulliver, says we recognise that the world has changed and we need to change with it. But the unions are worried about what it will mean for workers.
HSBC is one of the few employers where there isn't a voluntary redundancy scheme, and we're going to be demanding, in fact, for one to be implemented for this change. If we understand it correctly, the job losses don't need to be made until the end of 2017, so there's a proper time for the bank to really consider this.
The past year has been one of the toughest in HSBC's 150-year history, with scandals around tax evasion, mis-selling financial products, and even the recent FIFA drama is dragging HSBC's name through the mud. This restructuring plan is the bank's attempt to turn things round and maximise profits.
It's headquartered in London at the moment, but it's affected by specific taxes in the UK, which are problematic for HSBC, and also by British government plans to ring-fence retail banks from investment banks. And that also affects HSBC, which runs a high street operation as well as a global investment bank. So those are big costs for HSBC. HSBC has been trying to reduce its size for many years now. It wasn't that long ago that it employed over 350,000 people. Now it's 260,000. It's reduced the number of countries that it operates in. Before the financial crisis, banks were very keen to operate in almost every country in the world because making profits in banking pre-2007 and 2008 was frankly a much easier job. That has all changed now with new regulations, new capital requirements for banks. It means that making money in countries is now difficult. That means you have to go for profit, smaller, easier to manage.